Hey everyone, and welcome back to Investing Talk podcast. Today, we're going to be looking at a company that's been, kind of all over the place lately. SRIVARU Holding, symbol
Interesting.
SVMH.
Okay.
They're an electric vehicle company based in India,
Okay.
and their focus is on two-wheelers under the brand Prana.
Right.
So this is where things get really kind of interesting.
Okay.
The electric vehicle market in India is absolutely booming right now.
Right.
But SRIVARU's stock has been doing the opposite.
Really?
Yeah, it's dropped almost 90%
Wow.
in just the past year.
Oh.
As of January 15th, 2025, it's sitting at just 92 cents a share.
Oof.
And to add on to all of that, they just recently did a 50-for-1 reverse stock split. So what's going on here?
Yeah.
Is this a sinking ship, or is there something that we're missing?
Well, the recent reports are not looking good financially.
Oh,
Revenue for the past year was shockingly low, only $42,538. To put that in perspective, you could probably make more just selling lemonade on a street corner.
Okay, ouch.
Yeah.
That's definitely not a good sign. What about their losses and their debt?
So they reported a net loss of $11.43 million,
Okay.
which is a loss of 55 cents per share.
Wow.
And then their debt-to-equity ratio,
Yeah.
scary negative 72.4%.
What does that even mean?
That means they owe way more than they own.
Yeah.
Like building a house on a foundation of quicksand.
So survival seems like a big question mark at this point, let alone thriving.
Definitely raises some red flags, but you have to remember, this is a company working in a very dynamic market.
Sure.
This electric vehicle sector in India should explode in the next few years.
Right. And speaking of explosions, they just had their big SVM Day event
Yes.
where they launched a bunch of new products and laid out some pretty ambitious plans for expansion.
Yeah, they unveiled their PRNNA 2.0 electric motorcycle series.
Okay.
And they're saying it has some pretty impressive upgrades to the battery tech and performance. They also announced plans to really expand their dealership network, going from just 3 locations
Wow.
to 30 within 90 days.
That's a big jump.
Yeah, it's like going from a tiny mom and pop shop to a national chain overnight.
Yeah.
Oh, and they're also talking about releasing new scooter models soon.
Wow. Talk about aiming high.
Yeah.
But here's the thing. The market didn't seem too impressed.
Really?
Yeah, their stock actually dropped almost 39% after SVM Day. Why do you think investors reacted that way? Are they just not seeing the potential here?
I think investors are just wary of promises, especially given the company's track record.
Yeah, makes sense.
They probably need to see some results, increase sales, a clear path to profitability.
So it's a show me, don't tell me situation.
Yeah.
They need to prove they can walk the walk, not just talk the talk.
Exactly.
Let's switch gears a little bit and take a look at the technical indicators.
Okay.
What are the charts telling us?
Well, if we look at the technicals, it's a bit of a mixed bag. The stock price is way below both the 50-day and 200-day moving averages, which usually signals a bearish trend, like seeing storm clouds on the horizon.
Okay, so not a great sign there. Is there anything positive we can get from the charts?
The RSI Relative Strength Index is hovering around 49.
Okay.
This suggests that the stock isn't in oversold territory, yet think of it like the stock is on a seesaw, not quite at the bottom, but also not soaring high.
Okay.
And the average true range, which measures volatility, is pretty low right now.
Okay.
This could attract some risk-taking investors who are looking for a stock that might have some wild swings in the short term, like riding a roller coaster.
So potentially a gamble for a day trader?
Right.
But maybe not for your retirement portfolio.
Exactly.
All right. So even for the more cautious investor,
Yeah.
there are arguments on both sides here.
Right.
All right. So let's play devil's advocate here for a second.
Okay.
You make the case for why someone might be bullish on SRIVARU right now. What's the optimistic perspective?
Okay, putting on my rose-colored glasses here.
Right.
The bull case rests heavily on the potential of the electric vehicle market in India,
Okay.
projected to grow exponentially over the next few years.
Right.
Driven by rising fuel costs, government incentives,
Right.
and a growing awareness of environmental issues.
Okay.
SRIVARU, with its focus on affordable two-wheelers, could be in a good position to grab a big piece of this growing market.
I see your point. They're going after a market that's ready to take off.
Right.
And they're pushing hard with these new products and aggressive expansion plans.
Yes.
But let's flip the script here.
Okay.
What does the bear case look like? Why might someone be hesitant to invest?
The bear case is pretty stark. Their financials are, to put it bluntly, a mess.
Oh.
They're losing money, and there's no clear path to profitability on the horizon.
Right.
They also have a history of making promises they haven't quite delivered on.
Yeah.
And don't forget the competition in the Indian electric vehicle market.
Yeah.
Established players and a ton of startups.
Right.
All fighting for market share. So SRIVARU has a tough battle ahead.
So it sounds like we've got a classic high-risk, high-reward situation here.
It seems like it.
Valid reasons for both excitement and some serious concern. What do you think, listener, would you be willing to take a chance on SRIVARU?
That's the question you have to ask yourself. Do you believe in their vision?
Yeah.
Do their products and plans for the future outweigh those financial risks?
It's a tough call. No doubt about it.
Yeah.
We've given you the information. Now it's up to you to weigh the evidence and form your own opinion.
And that's what makes investing so fascinating, isn't it? It's not just about numbers on a spreadsheet.
Right.
It's about understanding the story behind those numbers, weighing the potential against the risk, and making a judgment call.
You're absolutely right. It's like being a detective, piecing together clues and trying to predict the future.
Yeah.
But sometimes, even with all the information in the world,
Yeah.
it comes down to gut feeling.
And a healthy dose of risk tolerance.
Yeah.
Some investors love that thrill of the unknown. A chance for those massive gains,
Yeah.
even if it comes with a higher risk.
Yeah.
And some prefer the slow and steady approach, prioritizing stability and long-term growth. There's no right or wrong answer. It all depends on your goals and your comfort level.
Speaking of comfort level, let's talk about something that might be making some investors uneasy. SRIVARU's recent 50-for-1 reverse stock split.
Yeah.
What's the deal with that? Why would a company do such a thing?
Well, as we mentioned earlier, it's often seen as a way to boost the share price and avoid being delisted from a stock exchange.
Right.
In SRIVARU's case, they were probably facing pressure from the Nasdaq to meet that minimum bid price requirement of $1 per share.
Okay.
The reverse split basically combined 50 shares into one, which artificially inflates the price.
Well, it's like rearranging the deck chairs on the Titanic.
Exactly. It doesn't change the underlying value of the company. If you owned 50 shares worth $1 each before the split, you'll now own one share worth $50. The total value of your investment stays the same.
Gotcha. So it's not inherently good or bad, but it's something investors should definitely pay attention to and understand the context behind it.
Absolutely.
It often signals that a company is struggling, which, based on SRIVARU's financials, seems to be the case here.
Right. It's a piece of the puzzle, a potential red flag that warrants further investigation.
Now let's zoom out a bit and talk about the overall market sentiment.
Okay.
We're hearing a lot about concerns over inflation and the Federal Reserve's stance on interest rates. How might this impact a company like SRIVARU?
That's a great question, and it ties into the bigger picture of economic trends. When inflation is high, like it is now, the Federal Reserve often raises interest rates to try and cool down the economy.
Right.
This can make it more expensive for companies to borrow money and invest in growth, which could potentially slow down their expansion plans.
So even if SRIVARU is making all the right moves internally, external factors like rising interest rates could throw a wrench in the works.
Precisely. It's a reminder that even in a promising sector like electric vehicles, macroeconomic conditions play a crucial role.
Gotcha.
Investors need to consider not just the company's individual performance, but also the broader economic landscape.
It's all connected, isn't it? And that's why it's so important to stay informed and understand the various forces at play that can impact your investments.
Absolutely. And that's what we're here for, to break down those complex concepts and help you make sense of the investment world.
Well said. But before we wrap things up, I want to circle back to SRIVARU one last time.
Okay.
If you had to give our listeners one key takeaway, one thing to really ponder before making a decision about this company, what would it be?
I'd say this SRIVARU is a bet on the future. It's a bet on the growth of the electric vehicle market in India and a bet on the company's ability to overcome its current financial challenges and actually execute on its ambitious plans.
A bet with potentially high rewards,
Yes.
but also some significant risks.
Exactly. And only you, dear listener, can decide if it's a bet you're willing to take. It's a tough decision, for sure. We've explored the potential upside, the financial red flags, and that head-scratching reverse stock split.
Yeah.
But at the end of the day, investing is about making those tough calls and weighing the risks and the rewards.
Absolutely. And remember, investing is a journey, not a destination.
Right.
There will be ups and downs, wins and losses along the way.
Of course.
The key is to learn from every experience and keep building your knowledge base.
So true. Speaking of learning,
Right.
I think it's worth taking a moment to break down some of these technical terms we've been using.
Okay.
For those who are new to investing or technical analysis, things like moving averages. RSI and MACD can sound like a foreign language.
Yeah, they can.
Let's decode some of that jargon. Ready to play investing professor for a minute?
Always happy to share some knowledge.
Right.
Let's start with moving averages. Think of them like a trend line that smooths out the day-to-day price fluctuations of a stock.
Okay.
We often look at the 50-day and 200-day moving averages.
If the current price is below those averages, it can signal that the stock is in a downtrend,
Okay.
kind of like a ship that's slowly losing steam.
Okay, that makes sense. So it's like a visual cue
Right.
that tells you the general direction the stock is heading.
Exactly.
What about RSI? You mentioned that earlier.
Yeah.
I remember thinking, RSI, what is that?
The RSI, or Relative Strength Index, measures the magnitude of recent price changes
Okay.
to evaluate overbought or oversold conditions in the price of a stock or other asset.
Okay.
It's basically a momentum oscillator that looks at the speed and change of price movements. Imagine it as a thermometer for a stock.
Okay.
A reading above 70 usually suggests that the stock is overbought, meaning it might be getting a little too hot and could be due for a cool down.
Okay.
A reading below 30 suggests the opposite. The stock might be oversold and potentially undervalued.
So it's a way to gauge whether the price is getting ahead of itself or lagging behind.
Good.
And what about that mysterious MACD you mentioned? I think I saw that on a chart once, but I had no clue what it meant.
Ah, yes. The MACD, or Moving Average Convergence Divergence.
Okay.
It's another momentum indicator that helps us identify potential buy and sell signals. It uses two moving averages and plots them on a chart.
Okay.
When those lines cross, it can generate those signals like a flashing neon sign saying, hey, pay attention, something might be happening here.
Okay, so we've got our trend lines, our stock thermometer, and our flashing neon signs.
I like that analogy.
That's starting to paint a clearer picture for me.
Good.
And hopefully for our listeners as well.
Hopefully.
Now let's bring it all back to SRIVARU.
Okay.
They're operating in a super hot sector,
Right.
but their financials are a bit of a dumpster fire.
Yeah.
They're making big promises, but facing intense competition.
Right.
And then we have these technical indicators giving us mixed signals.
Yeah.
So what's the bottom line here? What should investors be focusing on when it comes to this company?
I think the key here is to separate the hype from the reality.
Huh?
The electric vehicle market in India has tremendous potential, and SRIVARU on the surface seems well positioned to capitalize on that growth.
Right.
But they absolutely need to address their financial woes.
Okay.
Investors should be looking for concrete signs of improvement, increasing revenue,
Yeah.
a clear plan to reduce debt,
Right.
and evidence that they can actually execute on those ambitious expansion plans.
So it's not just about riding the electric vehicle wave.
Yeah.
It's about making sure the company you're investing in has a solid foundation
Yeah.
and a clear path to profitability.
Exactly. Don't get blinded by the hype. Look beyond the flashy headlines.
Yeah.
Delve into the fundamentals, analyze those financial statements, research the competitive landscape, and try to understand the company's long-term strategy.
That's great advice. It's so easy to get caught up in the excitement of a booming sector.
It is.
But it's crucial to remember that not every company in that sector is created equal. Some might be riding a wave of hype that could quickly crash, while others might be building a solid foundation for long-term success.
And that's where the real art of investing comes in, being able to distinguish between those two types of companies and make informed decisions based on facts, analysis, and yes, sometimes even gut feeling.
Well said, and that brings us back to that all-important question.
Yeah.
Would you invest in a SRIVARU holding?
I'm going to turn that question right back to you, listener. Based on everything we've discussed.
Okay.
The market potential, the financial struggles, the technical signals, the ambitious plans.
Yeah.
What's your take? Is this a company you'd be willing to put your hard-earned money into?
It's a tough one. We've laid out the case for both the bulls and the bears.
Right.
We've explored the hype, and the reality now, it's up to each individual investor to decide what level of risk they're comfortable with and whether they believe SRIVARU can overcome its challenges and become a true leader in this electric vehicle revolution.
Yeah.
That's right. Every investment decision comes with its own set of uncertainties.
Yeah.
But by carefully analyzing the information available and being honest with ourselves about our risk tolerance, we can make smarter choices and hopefully achieve our financial goals.
And remember, folks, no single podcast episode can give you all the answers. This is just a starting point, a jumping off point for your own research and analysis.
Exactly.
Take what you've learned today, dig a little deeper, and then make the decision that feels right for you.
That's the beauty of investing. It's a continuous learning process, a journey of discovery that can be both challenging and rewarding.
Absolutely. And hey, we're all in this together. We're here to provide you with the knowledge, the insights, and hopefully a little bit of entertainment along the way.
Yeah.
So stay tuned for more deep dives into the world of investing. And who knows, maybe we'll revisit SRIVARU down the road and see how things have unfolded. So that just about wraps up our look at SRIVARU Holding, ticker symbol SVMH.
Yeah, it's a company with a lot of potential, but they are facing some serious challenges. Yeah, definitely a story worth following, especially as the electric vehicle market in India continues to evolve.
Absolutely. Who knows, maybe we'll look back in a year or two and be amazed at how things have played out for better or worse.
Exactly. The world of investing is full of surprises, and that's what keeps it exciting. But remember, folks, knowledge is power.
Right.
The more you learn about individual companies, market trends, and those economic forces, the better equipped you'll be to make smart investment decisions.
And don't forget to do your own research. Don't just take our word for it.
Right.
Dig into those financial statements.
Yeah.
Read industry reports. Talk to other investors. The more information you gather, the more confident you'll feel about your choices.
That's great advice.
Yeah.
It's so easy to get caught up in the excitement of a hot sector.
It is.
But it's crucial to remember that not every company in that sector is created equal.
Right.
And remember, investing isn't just about picking stocks. It's about building your financial future. It's about setting goals, developing a strategy, and staying disciplined over the long term.
And it's okay to ask for help along the way. There are tons of resources available, financial advisors, online communities, educational websites that can provide guidance and support. Don't be afraid to reach out and tap into that collective wisdom.
Absolutely. Investing can feel intimidating, but it doesn't have to be a solo journey.
Yeah.
There's a whole community of people out there who are eager to share their knowledge and their experiences.
And remember, every investor starts somewhere.
Right.
We all make mistakes along the way. That's part of the learning process. The key is to learn from those mistakes, adapt your strategies, and keep moving forward.
Well said. So whether you're a seasoned pro or just dipping your toes into the world of investing, we hope you found this episode insightful and maybe even a little bit entertaining.
It's been a pleasure sharing our thoughts with you.
Yeah.
And we look forward to diving into more fascinating investment stories in future episodes.